All right, good afternoon, folks. This is Faris with Trade with Tex. Today we're going to be doing another YouTube video covering some chart prep for the upcoming week. It's currently August 30th, so next week we're going to kick off not only a new week, but a new month. All right, before I get into the charts that'll help you guys make some money for the upcoming week, I did want to mention briefly that we have a new YouTube video that we put out this past week that is a full 50 minutes, 50, so almost an hour long, and it covers the basics, right? It covers everything for beginners, and some of it might sound a little more advanced, but it'll help you lay the groundwork to potentially trade for a living, okay? Wanted to mention that because a lot of what we talk about in these weekend chart prep videos is advanced. Some of it might sound like gibberish, or you might just not understand about half of it, and that's being generous. And if that's the case, watch that video first. I know it takes some time, but watch that video first and invest your time so that you can potentially invest your money and make some more. Okay. Now we are going to kick this off here with a pretty positive note. Markets did go up substantially last week, and we're going to talk about the NASDAQ first, talk about this price action, what to expect for next week. But I got to say, I love the opportunity out there, and it's not just because stocks are going up, but a lot of these movers are rotating, right? We're seeing smart money rotate into not only hot stocks, but then immediately rotate out and back into travel stocks, rotate out, back into testing stocks. So there's a lot of activity here. So we're going to start it off with the NASDAQ, and then we're going to change gears a little bit and talk about Tesla because they have the stock split, a few travel stocks, and just at the very end, for those of you who are patient and you put in the time, we will be going over a more low-key under-the-radar mover that I really like going into this week, okay? So let's start it off with the NASDAQ here, right? We're looking at /NQ. Those are futures, just so that we can look at the key levels, but you can trade anything based off of that. Now, market movement, again, surprisingly bullish last week, and I say that because leading up to this week, we had very low volume, and we were already moving up on air a good bit. So I was expecting not even just a big pullback, but a technical reset, right? In the sense that we come back down very slightly before moving back up later in the week. And we had mapped out all these targets. All three targets were exceeded by Tuesday morning, to give you an idea. So very bullish week. Unfortunately, and I mean fortunately for traders, but unfortunately for swing traders, we're seeing a decent amount of volume going into this week, which is good for range, but it makes things a lot more of a roller coaster, right? That's the bottom line. So it's not as stable. Now, to be clear, I think these key levels are cash. I think they are cash money. They look great. They align with other key levels. So I'll show you exactly how to get these in a second. But the bottom line is we have key levels to go over, and trend. Trend is actually getting a little bit overextended here in the sense that I would like to see a healthy pullback at least to the 8 EMA, right? Because we're talking trends, so we got to talk moving averages, at least to the 8 EMA before positioning myself for other longs, for other bullish swing trades into next week. Okay, so I will still be swing trading, but a little bit more cautiously until we get that reset. And historically, when we have the RSI at the levels that we have them at now, I'll show you what that looks like. Right, you can see that this RSI is pretty far up there at 74. Even though that is typically a sign of strength, that is a little bit concerning with respects to just a pullback to these moving averages. That would be much more healthy at this point. So looking for a pullback to the moving averages. However, we got a lot of support. If you draw Fibonacci retracements from last week's low, so that's 11,528.25 up to 12,046. Then you get the list of key levels here. The only one that I've added in outside of that is 12,000 because that was giving us some trouble last week, right? Specifically Thursday and Friday, we saw the NASDAQ get smacked down at 12,000 a few times, okay? So if I zoom this in, we're on the daily time frame right now, so each one of these candles represents a day. But if I zoom it into the hourly, so 20 days, 1 hour candles, you can see these key levels working their magic, and this is what we'll be looking at next week. So currently we are boxing between this area here. Since it's in a bullish trend, again, I would like to see a technical reset, but we don't have a sign of that yet, okay? So since it's in a bullish trend, we would like to play the break through 12,000, but ideally, The support bounce off of 11,923 would be even better. Okay, so that gives us a fib 11,923.75, and then a historical level 12,000 as the range defining levels going into next week. Okay, those are the short-term range defining levels. As you can see, the other fibs line up perfectly with other key levels here, right? It's not just coincidence. This is how the math works. So realistically, right, we get some kind of a box play, whether it's a breakout or a breakdown, but so far we're just moving back and forth between these two. So these are the two levels you need to worry about short term. Okay, when we're talking about a trend pullback, because I did mention that a little bit, the level that you should be looking at for that is 11,848.25. And just to give you an idea of how this works, I'm saying that if this level cracks, we'll see a deeper pullback to those moving averages on the daily chart, the 8 and the 20. So this could give you a short play if it cracks, but for now, we're going to focus on this box. Okay, I just wanted to mention that because if something happens later in the week, you're fully prepped up for it. All right, but for now, 11,923.75 and 12,000 range defining levels. Okay, now one of the bigger reasons we had such a big week from the NASDAQ, Tesla and a bunch of other big names here, that's a new one, bunch of other big names here are really just moving on air. And I say air, obviously there's volume with them, but just euphoric buying pressure. And let me just slide you guys a simple note here, because even though markets are still bullish, even though sentiment is still bullish, trend is intact, you have to be cautious, right? I'm not saying that you can't buy plays and swing trade plays, because there will be more long side opportunities, but keep in mind it's an election year, and keep in mind the markets are at all-time highs. That's all I'm going to say. Right? Not calling for a big correction, not giving you a doomsday warning, just don't get so comfortable that you're forgetting to manage risk. Okay, Tesla is giving off that vibe right now. Now, Tesla, interestingly enough, you probably notice it's saying 442, right? This is no longer a $2,000 stock. And the reason being is that they have the 5-for-1 split. So just to map this out in a quick 30-second tidbit here, a stock split does not increase nor decrease the value of that stock, the underlying value of the company. What it does, and usually the point, is to make shares more affordable. So that being said, since Tesla is such a hot retail stock, when that news came out, that started just lighting a fire under it. Because, it's more affordable for people, more people will be buying it, send this thing to the freaking moon. However, and this applies to Apple too, which will be splitting this week, right? Stocks actually don't perform that well after their splits historically, okay? Not a lot of people know that, but it's because we are in a market where you buy the rumor and you sell the news, right? It's the same thing for when a company reports really solid earnings and then it goes down, right? But what you're not looking at is the 20% run up over the span of 2 weeks before that report. And it doesn't look like much, right? It's like 3% a day, but that adds up. That gets priced in beforehand. It gets baked into the share price, and then it sells back off. So actually, this is a cautionary note here for Tesla. Currently, the trend is intact. There is no denying it. However, because stocks run up into their splits and then sell off into the actual news, that's a more likely scenario here going into next week. Okay, it's already up tremendously. So again, trend is intact. We have no reason other than history to believe that. What we need now is to watch key levels and watch those trend areas moving forward. So for Tesla, one thing that I want to note, this area here, it's a different price if you're looking at the 1800s or whatever it was trading at before, but 389.61 up to 390.85. And by the way, I got these blue lines from hourly fibs. So take it to the hourly, right? Drop from low to high, that's 273 to 463.7. If you need to pause the video, right? That's why this is on YouTube. Pause it, and you can go back and update your levels here. But basically what that tells us is that there's a big confluence area, which is a fancy way of saying there are a lot of key levels right here. Okay, right down there. So if, and that's a big if, but if Tesla pulls back hard, this will be the big short target. On top of that, this will be the big bounce area, because there's one thing we know about Tesla: it is a relentless stock, right? You cannot rationalize its move over the past year. Okay, there's no well, it's growing a lot, Faris. No, that's not how this works, right? We understand the numbers, we understand the valuation. It's, a bigger picture pump, essentially. So even though it has the potential to drop down to this target area, remember, when it bounces, it is ruthless. Okay, so this is not only the short target, but also a big bounce zone. I would love to see a move down there. Another area to watch here, it's a little zone. Notice I'm focused on zones, not just one flat level. So this is the first one we talked about. The next big one is here, from the 415s up to the 418s. So short term, there's a lot of support there as well. There are 2 fibs. Okay, so draw your hourly fibs. That should have you covered, but you will need to add in this level and this level. Sorry, this one, manually. Okay, and then obviously the resistance here is just this previous high at 463.7. So if it closes the day, and I'm going to say this again, if it closes the day on Monday above the resistance, then it's going to go for another 1 to 2 day run up and a big push. If it closes the day under the support, then this is going to be a pretty ugly sell-off for 2 to 3 days. Okay, as it comes back down to earth. All right, I would rather play the sell-off because it's already ran up tremendously into the news. However, we're going to take it one key level, one day at a time. Okay, not rubbing a crystal ball here, just creating a game plan. So the idea would be for a short down to here and then here. But again, if it positively reacts to any of this support, get ready for a bounce play. Okay, I don't intend to play it on the breakout. Maybe a day trade or two, but I don't intend to hold it for more than an hour on any type of breakout. Just telling you right now. I'm not comfortable with it. So depends on your comfort level. Okay, so again, stock split. Be aware of that for Apple and Tesla. Tesla's a little bit more overextended, and draw up those levels. All right, now just to keep breezing through this, travel stocks actually had a pretty big week, and I feel like this got drowned out because of all of the craziness at the end of the week. We had Powell speaking, we had penny stocks flying, we had a lot of bottom bouncers, especially for solar stocks, as random as that is, that came to life. So a lot of these headlines drowning it out. But earlier in the week, Abbott, right, ABT, Abbott Labs, they came out and said, hey, our $5 15-minute test is working real well, even though it has some false positives, right? Love that little loophole there. Even though it has some false positives, we're ramping up production to, like 50 million units or something ridiculous, which is big for the transportation industry, right? Specifically, a lot of these travel stocks, a lot of these booking stocks, they ended up making a comeback off the lows, and not that aggressively, actually pretty quietly. Now, to give you an idea of the 3 that we like to play in chat, and this is, I'm saying we, but these are my personal favorites. I like to trade AAL, American Airlines, right? That one's usually pretty volatile. CCL, right? It's one of the cruise lines, also very volatile. And Boeing, which if you trade options, Boeing is a trip. It's very technically driven, goes key level to key level, and it's also very obvious when it sets up, right? I'm not just saying that. We trade this stock every single day, basically. So bottom line, the 2 that really stuck out to me from last week are Boeing and CCL. AAL, not really. I didn't really like the follow through. And out of these 2, normally I would just gravitate towards Boeing, but CCL has the better chart. And, I kind of hate to say that because I love trading Boeing, but basically CCL broke out on Friday above this area here. And again, it's good to think of these resistance and support levels as zones. We call them levels because you have an exact price, but they're zones. So as you can see, you might be saying, well, Faris, isn't that the resistance? But just a little, educational point for you. No, it's the zone. This is where the stock moved above and it couldn't hold it. So clearly, since it got knocked down once, twice, 3 times, 4 times, 5 times, Friday was the breakout. Okay. You can say, well, it faked you out. No, Friday was the breakout. All right. Nice relative volume behind the move. CCL is indicating a move at least up to 1759, which is a key fib. Okay. And then the next level is at 1783. Doesn't seem like a ton of upside, but I would be really shocked if we didn't get a magnet to that early this week. Okay. It would take a big market dip to prevent this and a couple of the other travel names from moving up further. Okay. But CCL, this is the first target area. And as you can tell, that's kind of a soft target. And I mean that in a pretty generous tone here, in the sense that I don't think that is the cap on its upside. I think there's a lot more upside here, specifically to the 19 level, if it can break. So your job is not to predict how a stock or futures ticker is going to react to resistance. Your job is to adapt to that movement. So right now, it is signaling this area. If it's able to break through that zone, then we get 19. So this is a conditional game plan, okay? But the bottom line is, this is the first target. That's the second. Second one is the one that has, enough upside to take this trade. And then 1906 would be the next target after that. All right. So bottom line, travel stocks are moving pretty well. A lot of people are already forgetting about that Abbott news, right? The testing news. So pick 1 to 2 that you like, map out a game plan minus CCL. You can use that if you want, and then watch it on Monday and Tuesday. All right. Now, 2 more tickers here, and I told you guys I was saving best for last. This is more of a speculation play, but I do like CEMI still, right? And I don't know what's going on with my Thinkorswim lately. Obviously, I'm sure a lot of you guys have switched brokerages because it's been giving you a hard time, but for some reason, it keeps deleting my chart drawings here. I like to think there's somebody just working the Thinkorswim grid in the background, just trying to piss me off. But basically, CEMI is a testing stock, right? And there's a lot of speculation about the FDA authorization coming out soon. It's ran up a ton to the 6s, and it has room to 6.06 and 517, as you can see from these key levels. So this is purely a speculation play, but it's an idea from one of the moderators in the Trade with Text chat, the actual paid one that's $50 a month that you can get the free trial for. His name's Dennis, right? Or some of you guys might know him on Twitter, pmoney5, which is absolutely hilarious. But Dennis is really good at his due diligence. This is one of the stocks that is a little bit oversold on the Abbott news. So even though Abbott is making strides with its testing, CEMI still has some pretty promising upside here. And, you don't need a lot of size to trade it, right? If you look at the risk to reward, there's about $1 minimum of reward, and there's about 50 to 60 cents of risk. So the ratio's there for you to take the trade. Again, you don't need to oversize into it. Just treat it like any other trade. So I'll be looking for a bounce back to 517 and 606. The only contingency here, the only thing that needs to happen in order for that to play out, is it needs to stay above this Thursday low, right? One of the things we focus on a lot in the chat room for intraday price action, right, for day traders, is basic volume concentration, right? Where is the volume being focused on this chart? There are a couple of times where you can see that there was higher volume. Okay, just at a glance. These times we're fully aware that that's why it had higher volume. A lot of selling at 6. We've already established that. The other time was a sell-off, and we need to annotate the low and the high of that candle. So as you can see, the low of that candle is 365, and this is where I was saying, about 50 cents of risk, and the high is up in the 440s. So that would be the first target. That would be a modest target. Next one is 517, and that's your risk. Okay, so risk, reward, reward. All right, so this is just a bottom bouncer that I'm watching going into next week. Okay, would like to see a little more strength. And the last ticker, I bet you guys forgot, it's earnings season, right? We got some good earnings plays throughout this last week. And I think one of the more amazing things that we've seen throughout this earnings season, and I'm not trying to sound overwhelmingly bullish or anything, just a lot of stocks crushing estimates. I don't mean, hey, they beat the analyst estimate by a couple of cents. No, they are blowing these estimates out of the water, right? We saw it with semiconductors. We saw it with tech names. It's very impressive, to say the least. And what we're going to see for the remainder, even though it's a little bit less, of this earnings season is a lot of these movers trying to price in the move ahead of time. Meaning, if outlook is positive for one of these stocks, if they normally beat earnings expectations, it's going to start running up before the report and then move depending on the numbers during it. Why would you play the binary event, the actual report, when you could just play the run up into it? So CLDR is one of the tickers that I'll be looking for a run up into the report. I believe it's Wednesday after hours that the company reports. So we got a solid 3 trading days for this thing to get back up into the 13s. But basically, it had some very bullish options flow on Friday, which put it back on my radar. And then I looked through the earnings calendar and I saw it was reporting. Last earnings report crushed it. They did very well. Then there was a ton of buyout chatter, which ended up not amounting to anything too significant, but it based back above this zone here very clearly and is now starting to ramp. And this ramp usually means the next 1 to 2 days is going to be pretty fun. So the magnet that it had when there was a lot more volume was 1359, and then the big resistance was 1393. This 1359 fib is a big time frame one. So I'm not going to go over how I got to it, but I've been monitoring CLDR for years, right? It was an IPO. That level is huge. Okay, do not sleep on that level. It is very big resistance. So naturally, mom and pop traders are sitting at home saying, oh, we're looking for a push to a new high. No, we're looking for a push to the fib because that's where the math is putting in its work. All right, so 1359 up here is going to be the first target area. 1393 is after that, depending on how it reacts to that. But basically, we just want to push to 1359. Okay, remember, it does have options, but they will be priced a little bit higher for earnings. So there's no shame in just trading common stock here. All right, in play for a day trade and a swing trade. This is one of my favorite charts going into this week. All right, so just a quick recap. NASDAQ key levels are going to be extremely useful this week because they all overlap with other ones. All right, and we would like to see a technical reset, right, just for it to drop back down a little bit to those moving averages before moving higher, because that would be healthy, but we'll take what we can get. Okay, Tesla, remember one of the 2 big names that's splitting this week along with Apple. Don't just buy it and chase it up. Use those key levels that we talked about, okay, for your day trades and swing trades. And then looking at 1 travel stock, 1 testing stock, 1 earnings play. That's a total of 5 tickers, not including the NASDAQ. If you need to trim that down, then by all means, go for it, right? Keep it simple. Actually, I did the math wrong in my head. Math is hard. 4 tickers, not including the NASDAQ. If you want to make it 1 to 2, pick your favorite. Okay. And again, I'll say it one last time, guys. This is not an educational video, if you couldn't tell by the first 23 minutes. It is a video geared towards making you money. Okay? So if you didn't understand something, you can pause it, comment down below and ask a question. If you like the video, feel free to like and subscribe. You can also turn on notifications by clicking the little bell next to the subscribe button, and it'll tell you when I post a video. Okay? And if you want to take your trading one step further, last thing I'll say, sign up for a free week in the chat room, right? tradewithtex.com/sign-up. Okay? Or you can just go to tradewithtex.com and find your way along through there. Okay? But we do a free week, and it's $50 a month. Alerts, live screen share, live audio, 2 webinars a week, everything. All right. But anyways, good luck trading this week, guys. I'm pretty optimistic. We had a killer week last time around. Let's do it again. All right. Take it easy, folks.